I've studied more than 1,000 trading strategies over the last 7 years, and 99% of them failed. But there is one secret strategy that keeps showing up. It was created on Wall Street back in the 80s, but it's so powerful that institutions use it till this day to move markets. And here's the thing, it's the exact same simple system that you can use today, even if you're a complete beginner. So in today's video, I'll walk you through exactly what the system is, and by the end, I'll walk you through real trade examples so you can follow it yourself. Here's the thing, the average day trader loses 36% annually, primarily because they all chase the same meaningless strategies, the MACD, the RSI, and all these random moving averages. When I started, I did everything wrong. I was jumping strategies on a weekly basis, and I literally mean a weekly basis. I was chasing dopamine instead of process. In other words, I tried everything but still lost consistently. But then I found one strategy that changed everything, and I made more in 4 days than I do in 3 years at my old job. In the last 4 days alone, I've made just over $80,000. Here's a 1-month backtest of the system you're about to learn. I took 13 trades, I had a win rate of 66.6%, I made a gain of 22.6% in that month alone, which if you're trading on $100,000, you would have made over $22,000 in that month alone. Now it says here that the average RR is about 1.7. That's inaccurate. The reason why it says that is because a lot of these trades went break even or maybe slightly in profit. And that of course significantly drags down the RR. Now I took a total of 8 winners and 4 losers, but here's what's crazy. The best win was 9.1%, while the worst loser was only 3%. That means my biggest winner outshined my biggest loser by 3x. After I'd been failing for nearly 3 years, it finally clicked. What if I just do the exact opposite of what I've been doing? And that's when I discovered the rectangular fakeout pattern. Now I want to ask you this, what do you see when you look at this chart? Most people see a consolidation or a ranging market. Well, here's what I used to see, a classic break and retest pattern. We have that classic support level down here, and right here price broke through it, and that's what I call a break and retest pattern. When price eventually retests this support area as resistance, well, then I was taught to short that market. But here's what really happened. There were resting stop orders at these lows, which I just thought was a regular support level. We saw manipulation that liquidated the stop orders down here, which back in the day I thought was a regular break and retest. So in reality, this was all a massive fake out and price absolutely skyrocketed. So in the next few minutes, I'll break down the 4 steps that you can literally copy and paste. Now, the first step is to identify your trading range. And of course, we are looking to take advantage of a rectangular breakout fakeout. Now, again, we're looking to take advantage of the rectangle breakout traders. And so what we want to mark out here is basically a consolidation where the highs and lows of that same consolidation have not been swept. And that is when we move right into step number 2, which is to wait for a break below or above the range that you've just drawn. So again, the idea here is that we get a break above a range, and normal people are going to long this as a rectangular breakout, but we are going to do the opposite and actually short that market if it goes above the highs. And we're of course going to do the exact opposite. If it goes below the lows, well then we long it. So let's see whether the market ends up sweeping the high or the low of this consolidation. And there we go. As you can see, the market definitely ran above the high and not the low. And what's great here is that we actually see some sort of follow through above the high, because that will immediately make traders think that yes, this is the breakout I was waiting for. And that is exactly what they need to think. Here's exactly how you make this a high probability trade. We do that in step number 3, which is to wait for a break of structure. So let's continue to play out price here for a little bit and see if we can actually get that break of structure that I'm looking for. And boom, immediately right here, we get that beautiful break of structure. We finally saw a candle closure below that previous structure. And what we're going to do next is pretty simple, because it's literally to enter your trade at the break of structure. I'm going to grab my short position tool here, place it exactly where the break of structure took place. I'm gonna give my stop loss some breathing room here, and then I'm basically gonna take my profit at the bottom of that consolidation. We have our sell limit, and all we need to do now is wait to get filled and let the system do the heavy lifting. And as you guys can see, I mean, this just went picture perfect. You could have made just about $2,000 knowing this very, very simple strategy. Also, if you want to see these setups as they develop in real time, I break them down every day inside of the free community. I'll show you how to join at the end. This first example here is going to be game changing, especially if you struggle to trade within the trend. It's what I like to call the trend continuation fakeout, and it's quite simple. We can boil down how a market moves and operates into a very, very simple matter. It basically goes like this. We see some sort of volume, aggressive price action, or what I like to call displacement. That's then followed by a consolidation, and in an ideal world, if this is a bullish market, well then now we're going to see that same displacement leg higher. It simply needed this balanced area in order to be able to go higher. The problem is a lot of people have no idea where to enter within these consolidations. And that is, of course, why this system is so great. We're going to mark the high and lowest point of our trading range, which in this case is the consolidation that I'm marking right here. I'm then going to move right into step number 2, which is basically to wait for either a high or a low sweep. Since we're in a pretty bullish market here, I would like to see a liquidity sweep happen at the low. And there we go. We've just ran the low, and all the rectangular breakout traders are currently going short at this very retest. We're going to do the exact opposite, and we're going to wait for a break of structure to take place before we actually long this market. We can break down how a market moves and operates into a very, very simple manner. You basically get an expansion higher or lower. That's followed by a balanced price area, also known as a consolidation, and then we get that same expansion either higher or lower. The problem is most traders have no idea where to enter inside of these consolidations. Now, this next example is crucial, especially if you struggle to trade within trending markets. I call this the trend continuation fakeout. We can boil how a market moves into a very, very simple matter. We essentially get an expansion either higher or lower. That's followed by a balanced price area, which is also called a consolidation, before we get another expansion higher or lower. The problem is most traders have absolutely no idea where they need to enter during these consolidations. And that is why this system is so great. In this example, I'll show you how to enter trades early. You see, normally we'd wait for a break of structure, but what if I told you that we actually don't need to? It's basically just a safety measure. We are going to mark the highest point and the lowest point of our trading range, which is the consolidation that you're looking at right here. And instead of now waiting for a break of structure, I'm going to take the risky route and basically enter my trade as soon as we sweep the low of this consolidation. I'm going to give my trade some breathing room here, and I'm basically just going to target a 2RR. We've placed our buy limit, and all we have to do now is play it out and see exactly what happens. And as you guys can see, we literally hit take profit in just a few minutes. This is a 5-minute time frame, which means you could have made over $1,000 in 45 minutes. That is what I call a perfect workday. Now, in this example, I'll show you exactly why a break of structure is actually the smarter move. So let's mark out the highest and lowest point of our trading range, which is the high that you're looking at here and the low that you're looking at down here. And we're basically going to do the exact same thing as previously. We're going to wait for either the market to sweep the high of the range or the low of the range. So let's play it out and see exactly what happens. As you guys can see, we immediately dump to the low. Now, here is where it gets interesting, because had I just longed this point here without a break of structure, let me show you exactly what would have happened. So we went long here. Let's say we target a 3RR and we continue to play out price. I would have been stomped out, and I would have been stomped out fast, because again, this is not really a break of the consolidation, which is exactly what we need. And that's what we got with this massive displacement leg here. Here we go, right? We got a beautiful break of structure when we swept this high right here. So I'm going to enter off of that break of structure just like I've done in previous examples. I'm going to make sure to include the entire break of structure, and then I'm going to target a 2RR, or basically the highs of that consolidation. So let's play out this trade and see exactly what happens. And as you guys can see, it was just picture perfect. Again, a 5-minute time frame, and you would have made over $1,000 in an hour and 20 minutes. And that's a lie. Actually, you would have made it in just 45 minutes once again. So had you understood this strategy, well, then you could have made over $1,000 in just 45 minutes worth of trading. Now, in this last example, I want to show you what I like to call the perfect trade, because these do happen. Again, I'm going to do exactly as I've done before. And guys, this might seem boring, but boring is profitable. I'm telling you. We're going to mark the low as we've also done previously, and then we're basically going to wait. There we go. We got the sweep of the high. Now let's see if we can get that break of structure here. There we go. We get a massive break of structure here, right? And so I'm basically waiting to go short on the break of structure that we got right here. I'm going to leave some breathing room for my stop loss, and then I'm going to target a 2RR. So let's play this out and see exactly whether we get filled or not. Now, in the last example, I want to show you what I call the perfect short, because these do happen. So we're going to do exactly as we've done previously. We're going to mark the highest point of our range, and we're going to do the exact same thing for the low. Now, guys, this might seem boring, but I'm telling you right now, boring is profitable. So this right here is actually the low that I'm looking for. And basically what we're going to do now is wait either. This is actually the low of the range. And what we're going to do now is wait for a break above or a break below. And there we go, right? We had a massive break above, and now we're seeing that massive displacement in the opposite direction. Again, we want to wait for a break of structure. And in my opinion, we really have to get below this low in order for the market to shift sentiment. So let's see if we can get that. And there we go, right? We got a beautiful candle closure below this low, making that break of structure. So we're going to go short at that very break of structure. We're going to leave some breathing room for our trade, and we're going to target about 2RR. So let's play this out here and see exactly what happens. As you guys can see, I mean, you would have just hit take profit in almost an instant. It's important that you all understand that this is not how your trades are going to look all the time. This system takes losers much like any other system. The truth is, there's no system that does not lose. But there are 3 unbreakable rules that you need to follow if you don't want to mess it up. Because even if you have a profitable strategy, you could end up losing money. Rule number 1 is to trade zones and not lines. Give your trade breathing room, okay? Allow your system to work. When you're trading these small lines, well, then you're essentially trying to predict the market with pinpoint accuracy. Rule number 2, be on the opposite side. And here's what I mean. If most traders are short, you are long. The last rule, however, will determine your longevity in trading. Rule number 3, risk what you can afford to lose. This is a no-brainer, yet people simply don't do it. With that being said, I really hope you guys enjoyed this video. Also, if you want to join my free private community where I give out trades exactly like the ones I've just shown you every single day, well, then I highly recommend that you check out the link down below and join the team today. I don't have any courses to sell, no premium tiers or any hidden fees. It's literally free. Why? Well, because trading has made me enough money to the point where I can pay my rent and live my life exactly how I want. So for that reason, I don't need to be charging you thousands and thousands of dollars for information that could literally change your life. Stop falling for all these fake outs and stop falling for all these fake gurus, and instead, well, start trading with actual traders.